It's been an exciting year for the precious metal inclined, with gold hitting several all-time highs, but it's been hard to make resource bets pay off with miners showing mixed results. Jeff Clark is a founder of thegoldadvisor.com. Jeff, welcome back to Kitco.
It's great to be here, Michael. Thanks for having me.
Jeff, let's start with this macro backdrop first. There was a big market correction this month when the Nikkei triggered a global sell-off. We had that soft labor report from the US. What's going on?
Part of it was the yen. Part of scares about the yen. Part of it was a weak demand for a 10-year treasury. The 10-year treasury is the benchmark bond for the U.S. government. Demand was weak, so that probably triggered some selling. The poor economic news, scares about a terrorist attack. There was a perception that maybe the economy was not as strong as people thought. So a lot of that contributed to it, and it all hit on one big day.
Let's talk about gold's move to date. We've hit several all-time highs in 2024. Why is the metal moving, Jeff?
Well, it all started back on leap year day back in February, when the perception was, or the Fed actually said that they were going to raise rates sooner than they had previously stated. That kickstarted the metal. Then you had some momentum trading, some short covering, so the demand spiked it up. And it's really not looked back. It's basically traded between 23 and 2400, peaking its head above new all-time highs occasionally. Reacting to short-term events. But a lot of that is noise. The big picture, you have to be long gold here, and I do think it's going to go a lot higher.
Talking about being long gold, the gold miners are supposed to be leveraged to the gold prices, Jeff. So if you're going to be making a bet on gold, you're supposed to be getting some outsized returns if you're betting on the miners. But when I look at the GDX compared to the jump in physical prices, they're nearly tied right now. What's going on? How come we're not seeing better moves from the gold miners?
Well, Michael, why would I buy a dirty mining stock when all the rage is with a tech stock or AI or whatever? So the Main Street and Wall Street have not moved into our sector yet. I think that is coming. History says so. But because the money is still over there and not in the gold market, we have not seen the big moves in the mining equities yet. Again, I think that's coming. If you look at the ratio of GDX to gold, to GLD, you'll notice that it's still near all-time lows. So it's not really moved yet. But if you look at it the other way, that means that for GDX, that ratio to get back to where it was in 2007, GDX would have to outperform gold by 5 times. Now, I'm not saying that's going to happen. I'm saying the potential is there, but it shows you just how undervalued the miners are relative to gold. I think by this time next year, we're going to be having a different conversation, Michael.
Jeff, do you think there's any triggers that might help with the GDX finally go up? Is it going to be when we finally see these interest rate cuts? Is it going to be a turbulent election? Is it going to be kind of more geopolitical worries? I guess, what do you see as potential catalysts for getting the GDX going up higher?
To get mainstream to invest in the equities is going to take something significant on their end, meaning cuts in interest rates, more fiscal easing or monetary easing, something geopolitical, like you said. What I think on our end could trigger it is when the producers report their Q2 results. Some are out already. But in general, if there's a lot of green on the screen from these producers in Q2, that could start to attract mainstream investors over to our side. And, that could potentially happen. That could be the trigger that starts all this. We'll know by the end of the month what kind of results they're reporting. But the reason it's important is because the gold price was materially higher for all of Q2 versus previous quarters. And so that's why we should see a lot of green on the screen.
Let's turn to M&A, and then this will really talk about exploration development plays. And we started the year with some sizable deals in the gold space. Lately, it's all been about copper. That's been the BHP London JV that we saw, as well as Rio trying to take out Anglo.
There has been some M&A. I think it's going to pick up though. And actually, this ties into what I said earlier that the producers reporting a lot of extra free cash flow now in Q2 because that extra $300 per ounce is going right to the bottom line. If producers report a lot of more free cash flow, higher earnings, all that, that gives them the cash to start M&A. I think we all know in the industry that M&A has to happen because the majors don't have the ounces that they need, and we also know that it is cheaper to go out and buy those ounces as opposed to exploring, drilling. Even if it's a brownfields project, it's still cheaper to just buy them. Now the producers, most of them, should have some extra cash to begin that process. I actually hope it doesn't start too soon because the juniors are so depressed. But it's going to have to happen here at some point, and I think that could be a trigger to really kickstart M&A into a new trend.
Let's stay with precious metals. Can you compare gold and silver, Jeff? Is there a stronger story looking at contrasting both metals?
I think a lot of the audience knows that in a precious metals bull market, silver outperforms gold. It tends to start slower. We've seen that right now. Gold tends to be a little stronger. But before this is all over, however long it takes 1, 2, 3, 4, 5 years or longer, by the end of it, silver historically has outperformed gold, and therefore we should reasonably expect that again. So the better value might be in silver right now. However, gold responds better to negative economic events. If we get a recession, gold usually rises in a recession. Silver usually falls. If we get a stock market crash, gold tends to perform better in that crash than silver. So there are some things that are potentially out there that could affect this. But in the long run, I like both metals. I own a lot of stocks in both metals. But by the end of it, silver should outperform gold.
Let's swing to that other thematic, and that's copper, Jeff. I don't recall a metal that has been, how would you say, hyped as much going into its cycle. So I look back and think about lithium, for instance, maybe about
Yeah.
nickel, but a lot of people have been pounding the tables on copper. And going back to those recent M&As. Those are really big numbers that were put out there for forwarding copper. How does copper look to you, Jeff?
I think they're doing that because they're taking a long-term view, 5 to 10 years out and longer. Where's copper going to be? What's the demand going to be like? Where's the price going to be? What can we sell it for? So I think that's why they're doing that. And I would encourage all of us to take the same approach, take a long-term view of that. But in the short term, there's a lot of noise. It is a real supply demand issue that will rear its ugly head here in the next 1, 2, 3 years. So I think that's a lot of it. The copper price has pulled back. I like the range where it's at right now. It's given back most of its 2024 gains, so not a bad entry point. But keep in mind that if you go back to the 1970s, the copper price has never risen in a recession. Its stock market crashed, it's not going to rise either. The recession, because the economy is slowing down, so demand for copper would reasonably slow down. That's the thinking. So if you fear a recession is right around the corner, you may not want to buy copper. On the other hand, of course, we're not betting on copper so much as we are copper equities that can make a discovery or advance a deposit in a big way or starting production, something significant that is going to impact their stock price.
Lastly, Jeff, what's some of your top ideas?
Glad you asked. I have lots of good ideas, but we just put out two today that I think are ones that people might want to look at. One was Independence Gold. This is a gold explorer in BC. They just reported some results this morning, and that was 267 gram meters gold in one hole, and the other hole was almost as strong. So this was a very good hole. On top of that, it's outside where the resource is already located. So this looks very promising. The stock is popping as a result, as it should, but it's still near the bottom part of its trading range, so it's still a good buy at this level. I think there's going to be a lot more ounces they're going to add, and the grade, by the way, is actually significantly higher than what Blackwater's project has just 16 kilometers away that's about to go into production. So this is a very good buy, I think, in my opinion. The other would be Vox Royalty. They put out some news again today. Their Q2 results, pretty strong financial performance. The reason you would own Vox, though, is because I expect them to outperform because they're going to have a lot of royalties kick in over the next 1, 2, 3, 4 years and more. That's really going to see their cash flow jump. So this is a strong hold for us. It's a buy and hold for the bull market. I expect some good things. And by the way, that stock has actually outperformed gold 3 to 1 year to date. So I think there's a lot more ahead there.
Jeff, thanks for your time.
Great. Thanks for having me, Michael. We'll talk to you again soon.
My name is Michael McRae. You're watching Kitco Mining.